Good morning, everyone. Just let me confirm once whether we are live or not. Just give me a minute. Yeah, I'll just check it for once whether we are live or not. Just give me a minute. Yeah, so I hope we are live and everything is very fine. So, students, very warm wishes from my side. Happy Diwali to all my students, my friends. Yeah, so basically today we are going to have a quick revision of the most important topic from APM, Advanced Performance Management, that is non-financial indicators. So yeah, before I just start, I would like to just tell you students that yeah, this obviously becomes the most important topic as yeah, I'll just make it very big so that it is clearly visible. I think it's clearly visible. Yeah. Okay, cool. Cool. So yeah, without any further delay, what's the meaning of non-financial performance indicators? So yeah, if I just break down the words and like why again it is important in the subject APM, Advanced Performance Management. So today we know students that if I go ahead, I know that the financial accountant is not just restricted to the financial figures. Okay, if there is an accountant, so I'll say the accountant's responsibility is through what? So I'll just confirm it like, okay, accountant's responsibility is to, let's say, prepare the financial statements, which covers financial position, P&L account, and everything else, like in the terms of numericals, okay? But today I know, if I just understand all this stuff, it is not enough. It's not enough because a hell lot over here, a hell lot of non-financial performances also impact the company's performances. Like if I say how good the quality of the products are. I know I just cannot compare it. I just cannot quantify it in the numericals. But obviously, in the long term, I know that how good the customers are satisfied from the company's performances. How well the people like the company. Like what can be the future positions. Like I want my company to be where at the end. So yes, all these stuffs are very important. I would like to just give a small example of Ola and Uber. So if I just give you an example, in India, we know we have an Ola and Uber, which are good in the like driving and all. Okay, so it's a good road transport. So if I asked you, how is the company's growth of Ola and Uber? So you'll say, ma'am, the company is good. Like the company is good. And again, I'll ask you, have you seen the financial statements? So maybe you'll say, okay, ma'am, we haven't seen the financial statements, but we expect the company is good. What if I say you, the company is running into huge losses? So this thing like allegedly serious? Yeah. Because they have purchased very much, like say, I can say a lot of vehicles. Yeah. So they have a huge capital investments wherein I can expect that they'll be having a huge amount of depreciation. So obviously their P&L statement will be showing a heavy losses. Isn't it? Yeah, they'll be definitely having a losses. But if I'm saying you, even we thought, okay, yeah, ma'am, the non-financially, I feel like these companies are very good, isn't it? But how? But how? I didn't went into the financial terms. I didn't went into the financial figures. Then how could I just recognize it that yeah, it's cool? Just because. If I see the management, if I see the long-term perspective, if I see other factors, it is more better than just the financial terms which are visible in your financial position and your P&L statements. So non-financial over here means we just don't have to cater on what only on the financial figures. No. The need of the non-financial measures are because we want a sustainable environment, a sustainable organization, considering all the factors which in future can impact the decision of the users along with the decision of the companies going ahead. Yeah. So without any further delay, let's just start with the chapter. And students, Yeah, this chapter becomes important because it is small topic, and I am betting you students, whatever topic I gave you, it is sure going to come in your papers. Like definitely you are going to see that. Okay, definitely you're going to see that. Cool. Chalo, without any further delay, we'll just resume it. Okay. So this is just the background that we are going to study. So what are the stuff that we are going to understand it? See, I just wanted it as a quick revision, but considering that I didn't left a single portion which is there in your ACCA study resources, because I feel ACCA study resources is a complete resource which you can get it to study. So just cannot avoid that. Cool. Okay. If you just read it, we have some non-financial performance indicators. So what are the indicators? We'll be learning that the beautiful models we have, that is known as these Japanese practice and techniques, which in the normal term, we say it as these are the lean system. The technologies and the practices of the lean system is going to be understood. Then that is okay, TQM, total quality management, just in time, Kaizen costing, target costing, and accounting system. Up next, we'll be understanding what's the meaning of brand awareness and company profile. So it's very easy, isn't it? Like what will be the meaning of brand awareness? So I'll just explain you. Okay. Let's say if I am not so well, if I'm not so rich, okay, if my financial positions are not so well, but if I know about some brand, what's the meaning of that? Obviously it's known as brand awareness. Means even if you don't have money today, for sure, even if you don't have money today, but at least you are aware of the brand, and that is what is the first and the foremost thing. When a brand comes into picture and when brand is being launched in the market, they want this thing to happen first. They don't want the customers, they want the customers to have the brand awareness. Okay, and then we'll be understanding about Six Sigma, and last but not the least about the quality management. So without any further delay, let's just start. Okay, so the non-financial performance indicators says over here the interaction of both. As I told you, students, it's not just like I have to only concentrate on non-financial terms. It's basically a combination of financial and non-financial factors which goes hand in hand. So yeah, it is not possible if I just concentrate on one thing and ignore the second one. No, then in long-term perspective, things will not work. Okay. So interaction of financial and non-financial performance measures. So over here, if you see that the first question over here things is given weaknesses of only using financial measures, which was way back in 1980s. Okay, over here traditional performance measurement was based almost exclusively on the financial measures, because in the ages way back, okay, in the long term ages, however, since 1980 people have thought, like in the huge ages, people have thought like, okay, only financial data are important. But now many companies have recognized that there are inherent weakness if I just concentrate on financial. Just because if I want more profits, people will try to degrade the cost of the material, isn't it? Yeah, there is a huge chances of manipulation. And this is what the company want to avoid it by maintaining their quality, serving their customers to the best of what they can get, and yeah, again, prospering the company in the long term perspective too. Okay, so what are the inherent weaknesses? So what used to happen, guys? They used to have a huge amount of focus. Oh, I want to reduce the cost. I want to reduce the cost. Are they, at what cost are you reducing? At the instant or the urge of reducing the quality which is not acceptable, guys, which is beyond acceptance. Okay. So they lead to excessive focus on cost reduction. So basically, students, there are two type of things. It's cost control and cost reduction. So students, we need to understand that for a short period, I should not control the cost. Means just for the current period, if I want lesser cost, so what I will do to earn more profit, I will like purchase material A with a cheaper quality material, isn't it? Maybe I will purchase a low graded like raw material. Maybe I'll keep my employees which are not so highly skilled. Maybe I'll accept it with the low grade. But students, in long term, this is not going to work well. And I feel like it's better to do the cost reduction over a long period. Means try to develop what? Instead of reducing the labor cost, try to give them so much of training in such a way that whatever wastages my labor take or whatever time they take, they need to have a complete learning curve. so that their efficiency, their growth, effectiveness is increased. Along with that, if I have, let's say, 1, 2, 3, 4 suppliers, try to cut short supplier, try to purchase it from a single supplier so that I get the max discount because I purchase in bulk. So all these are in a better way to reduce the cost. Okay. So over here they have returned to delete. I'm so sorry because over here it's very cold and obviously it's Diwali. So yeah, cool. So they lead to excessive focus on cost reduction. Short-term cost reduction may be achieved at an expense of long-term performances because today, if I'm reducing cost, yeah, reducing cost so that my product is sold cheaper. Cool. Product is sold cheaper. So maybe today there will be a lot of demand. Yeah, people will feel, oh my God, it's very cheap. Let me purchase. But what if I degraded the quality? Maybe in the long term, you are taking into risk the long term. Please don't do that, okay? Due to effects on staff's morale, quality, and other factors also. So what they have up next written here is the financial performance. The financial performance measures tends to have an internal focus, but in order to compete successfully in the organizations, they even have to consider the external competitors also, the external factors also. So today, if I just concentrate on internal factors, Baba, external demand, external choice, customer's choice, competitors' strategy. If I don't consider this, I'll be out of the market no sooner, isn't it? So yeah, that also needs to be taken care of. Financial measures are traditionally backward looking. So organizations have to consider something in future. So what they have to do is they have to understand the dynamic business environment. Because of the changing effects, people has to cater that and move ahead. Okay. Yeah, simple. Now we are interaction of financial and non-financial performances. Now students, this becomes important. Why? If you can see this, financial performances indicates what indicators ignores the drivers to success. Whereas, what are the drivers? If I'm just figuring it out, just understand. If I figure it out only on the financial terms, only on the financial figures, only on the financial figures, yeah, I'll be just concentrating on lesser the cost, profits needs to be more, my revenue needs to be more. But what are you, sorry, my revenue needs to be more. So what are the things which I am ready to sacrifice? Which are the things I'm ready to sacrifice? So maybe I'm ready to sacrifice what, yeah, just give me a minute. Yeah, I want my revenue to be more, my cost to be less, and my profits to be more. At the point of vote means I am okay to sacrifice whatever the quality is. Maybe bad quality, it's okay. Ma'am, I used to give them the delivery like after 1 month. No, no, no. Customer wants quick delivery. And just understand, students, if it is your online business, yeah, online, if you're selling things from the website, customer wants instant delivery, and that is what the customers are interested. You must be knowing that. You must be knowing that the customer wants quick delivery, and not just quick. They want exactly what you have ordered. Yeah, they want customer wants the satisfaction. I just always give you one hint, one example, which is my students knows that. I have purchased a conditioner and this is what literally happened with me. So it made this thing impacted on my mind. So I know there was, let's say, there was a season where people used to buy AC for sure. So I know that maybe my installation and things will get delayed, but I didn't expected so much of delay. Like what happened eventually, I went to the shop and yeah, I'll not even add to the name of the shop because it's very good brand. Yeah. So I went to the shop, I purchased an air conditioner, I made the payments and everything was done. They told me, okay, ma'am, the AC will be delivered to your place within 1 day. Okay, so I was good with the delivery. Cool. The quality was also good. But when it came to installation, I just used to give them a call. When will the installation person give? So they told, okay, ma'am, we have a lot of demand. We have a lot of deliveries. So my after sales service people are very much busy. So maybe they'll visit you tomorrow. Maybe they'll visit you day after tomorrow. So I was not happy with this after sales services. Definitely, if I'm not happy with this, customer will not be satisfied. So even one of the thing is bad, it is going to impact because maybe I can tell my other friends, okay, please, like, see, things are very good here, but the installation and also they take a lot of time. Maybe you can switch to some other supplier. Cool. And it's not just because of us guys. Even if you just see, when there is a huge demand, and if the employees are less, Ari Baba, what is their mistake? Installation people, even they have to cater to so many places. Even my employees will not be satisfied. Even employees will not be satisfied. So, Baba, it's not just the financial performances. We have to concentrate on the non-financial performances also, and these are certain indicators. I hope you are getting it right. So, yeah, we are just building up the concepts behind it. So when I say NFPI means non-financial performance indicators drives the business forward in the long run. So financial performance indicators have to measure the success, but they do not have to ensure the success. But they do not ensure success. Why? I can measure it, Baba. I can measure it. I can check in the financial statements. I can get a concrete figures. I can measure it, but it is not going to give me a surety that I'm going to be successful. No matter your profits are high, but a stake of what? Maybe a stake of providing bad quality, maybe a stake of customers not being happy. So, Baba, that is not going to plan up your future in the best possible way that you want it, guys. Cool? Okay, up next, they have given, since 1980, we know that the companies have turned up. They thought like, it's not just the financial figures. We know that. It's more than that. It's more than that. So what are those stuff? So since 1980, therefore, many companies have started to develop a non-financial performance indicators and that are used along with what? Along with financial figures. See, if I just say you, okay, if I want to achieve non-financial success, no, Baba, it's like totally depend upon the financial statements also. Why financial figures also? If a customer wants to be satisfied, is it not the financials need to be better? For example, if I tell you, okay, my employee needs to be satisfied. Obviously, if the company is not working well, how will my non-financial factors be at a better position? Yeah, so it goes round. So these are used along with financial performance measures to give a complete picture. So it's a rounder picture, like a complete picture of the organization. I hope you guys are good with it. Okay. So what's the links and trade-offs? So financial and non-financial performance and the indicators interact with each another in such a way that, for example, an organization wishes to increase the market share, it may reduce the price or make a special offers available. Because I want to be at the top position, like I want the market share, the people to only purchase from me. So for that, obviously, I have to put some efforts. Yeah, so that way. Over here. Such actions might increase. Okay, just try to understand. Such actions might increase the market share in short term. But I know the competitors can never be something who is behind. So, but before competitor reacts, it's likely to reduce the profit margin also. Or suppose an organization has a focus on cost reduction and has an objective of 100% delivery to like, make the happy my customers. Okay, it can also be there, but students, it's not just like only one thing at a time. No, we have to go cope up everything. So if there are production delays, for example, okay, if the productions are delayed, what will the delivery people do? It's not their fault. It's not actually their fault. It's not even the courier company's fault if the production is delayed. What will they do? Yeah, so if there are production delays, orders may need to be delivered by courier, say to ensure the timely delivery. But this will increase the delivery cost. Why? Maybe you taking up, instead of normal deliveries, you need to make a fast delivery. Like in short, the cost is obviously going to increase only. So there may therefore need to be some trade-off between some adjustments between financial and non-financial aspects of the performances too. Cool? Now, certain very common advantages they have asked us. So if I just see the advantages, the very unadvantages, for example, if it's a performance measurement and in the financial terms, I get the concrete numbers. But here, it's a problem because I cannot like write in the quantify in my financial statements. Oh, the qualities rating is this. My customer is happy. Maybe I can give them, okay, please give me ratings like rating 1, 2, 3, 4, etc. But a very common thing which I always tell my students is, let's say if I'm very happy by doing video call to my family, I was very happy. And yeah, after doing the video call, there is an option like, please give us that 5 stars out of 5 stars. If I'm very happy, I directly click on 5 star. If I'm very much irritated, maybe I'll not even give any star. Maybe I'll give just 1 star. So the ratings are not a proper position as compared to the financial figures. Yeah, there could be a difference. So they are usually easier to calculate than the financial measures. So they can provide much more quickly. For example, at the end of each shift, maybe I can ask them how happy you are. Maybe it is flexible because organization can come up with the measures that are appropriate for their objectives. The popularity is of non financial performance indicators were driven by a more competitive environment in which the organization found that in order to compete, it is very important to consider the quality factors. Please, students, these if non-financial performance indicators question comes, you are supposed to write these two words. Otherwise, you'll not fetch the marks. That is quality and customer satisfaction for sure. Cool. So quality and customer satisfaction is very much important. Okay. Now we know that if there are certain advantages, without disadvantages, things will not be completed, isn't it? So yeah. Problems. What are the problems of growing emphasis on the non-financial performance indicators? Like over here, the organizations often ignore the financial performance entirely. See, Baba, entirely only one function will not work. Entirely things will not work. They need to be in the proper combination. Like what is important at what period needs to be catered first. Okay. So this is clearly not appropriate when the objectives of an organization is what? Yeah, this is the objective of every organization, to maximize the wealth of its shareholders. Second, organization develops too much NFPIs, very much. Okay, this is also my non-financial performance indicator. Even this. Are Baba, every time it is not so easy to find out, yeah? Which may be in conflict, which maybe like for somebody it is acceptable, but for somebody else it isn't. Then what? Yeah. So many of which conflicted, and this resulted in confusion from the manager that was trying to achieve exactly what the measurements we wanted. And at times it is difficult to interpret or to make the decisions based on the qualitative data. Cool? Easy? Now, students, we are going to understand the most important indicators from you. So students, over here now we have certain measures, and for that measures I will try to like make one slide. We'll try to write something and then we can go ahead. Okay. So if I'm just saying you the first statement over here which comes upon is the known as balance scorecard model. So what is balance scorecard model? Okay. So if you remember, there are chances that people was first interested only in the financial terms. But now, because of the of the understanding of the non-financial factors, today it has been understood that only financial factors will not be enough. So it is the method. So yeah, if I just write it balanced scorecard, you can get the word. It's balanced. It's balanced scorecard. Balanced means the things need to be balanced. In what terms? It is a method. So basically, it's a method which is going to concentrate on the company's performances or the organization's performance in four dimensions. So basically, they consider four important points. So what are the four important points? Yeah, the four important points are, first of all, financial. Without financial, things will not work because it's a balance. Financial, plus they expect a customer to be the king of the market, and so they want to cater and to understand the customer's needs and desires. Then obviously the internal behavior on the internal business. Last but not the least is known as learning and growth. Yes, students, are you understanding it? So yeah, if I want to achieve the company's success in a long run, I have to keep a proper balance between all this stuff. So what's that? It's a balance scorecard. So these are the four dimensions which we have to concentrate. That is the first, financial perspectives. So this financial perspective is concentrated from whose point of view? If you see, it's related to shareholders. It's related to shareholders. Means it views organization's performances from whose point of view? So here if I understand, over here, the balance scorecard, when I want to achieve the organization's success, I have to understand from the perspective of shareholders' point of view. Means I have to focus on the financial terms of the company. That could be either the revenue, Yeah, it could be growth, it could be ROI that we have learned, EVA, yes, we have learned, profitability, etc. Then if I say, okay, Baba, if you want to achieve a success, you have to understand the company's customer's perspective also. Means it's something related to customer. So the company has to view what the customer wants. Yeah. So it includes like customer satisfaction, maybe customer, like the company has to see whether my customer is loyal. Means, is he the first time customer or he is the repetitive customers? Are we retaining my customers? Are we making such product that the new customers are interested in my company? Yeah. So all this stuff also we have to see. Up next, then we have internal business perspective. Internal. So what it is related, guys? Guys, it is related to internal process which the company has. For example, I want to see how good my company is maintaining the quality, how good it is efficient, right? How good it is effective. Means by using the minimum number of inputs, how good I am in processing the maximum outputs. Yes, students, all these stuffs are very, very important. Okay. So even that can be a hint where you have to go ahead. Last but not the least is learning and growth. Means it is understood from the employment in such a way that how good an organization is in going ahead with the new technologies, with the new research and training, like its training hours, research and development. I need to know how good the company is in learning. Means how my employee is getting knowledge about, let's say, employee satisfaction, employees learning growth curve, yeah, learning curve, so all this stuff. Okay, students. So if a company concentrate on all these four factors, definitely in the non-financial perspective also, the company can have a good growth. Yeah. Okay. So yeah, we'll just read it for once. So we don't have so much of things to be going in depth, but I really wanted us to know, so I just had a glance. As a result of problems, yeah, as a result of a lot of problems, there was an author which is known as Kaplan and Norton have came with an idea of having a balanced scorecard. So here the balanced scorecard encourages the environment and the organization to take a more balanced view of the performance management by choosing a small number of financial and non-financial measures together. What is financial measures, ma'am? Finance. Then we have customers to combine customers' balances. Then we have over here, it's if you can understand. Yeah, students, it's very important to even have a word on my internal business process. How good I am in making my work. Okay. So it's internal business. Last but not the least, we need to have some learnings, right? Learnings and growth. I hope we are getting it. Yes, students. So all these stuffs can never be ignored if I want to achieve in long run success. Okay. So it's just a balance between what? It's a balance between your financial numbers and your non-financial factors. Up next, students. Um, like if I just want one hint, I'll just take up a shot. Yeah, I'm just seeing the charts. If yeah, just give me a minute, students. Yeah. So hope we are going good. Yeah. Yeah. Yeah, so perfect, perfect, perfect. Even my voice is getting it clear. Yeah. Okay, okay, students. Now, up next, we'll be just learning ahead with the concept. Just let me share it with you guys. Okay, students, now we have come up to the most. So you'll be telling, ma'am, why so much of most, right? Why, ma'am, so much of most? Because, guys, this is going to be the most important model, which is known as BBM, building block model. It's known as building block model. So what's the meaning of building block model? And guys, this is what I have expected. See, if it is First of all, from chapter number 1, which we have already taken, it's the benchmarking process, which is most important. So guys, benchmarking process can never be ignored. Along with that, if benchmarking question came, definitely BBM may not come. But if BBM came, maybe benchmarking. So these are something which I have seen in the alternate papers. So guys, BBM is the most important topic. So what's BBM? See, I'll try to make it very easy. I'll try to make it very easy. So certain concepts are there in this chapter, certain concepts are there in the previous chapter, but we are going to have a small overview first and then we'll go ahead. So it's known as building block model. Building block model. Cool. So over here, this is a model which has been given by Moon and Fitzgerald. Yeah. And mainly they are considering the measurement performances of which industry? So it's a service industry. So over here, mainly they want to have what, guys? Mainly, I'll just write it over here. Yeah. So mainly the company wants to have a measurement of whose performance is measurement of service industry, guys. Service industry. Okay. Now I'll just write it. What are the factors? So students, these BBM, the words BBM, it's divided into three parts. BBM. So three parts. What are the three parts, guys? Over here, if you just check on, there are three parts. Okay. So you'll be wondering, ma'am, why am I making colors? Because you have to understand it. First is, another one is